Hey, what's going on, everybody? You came in asking that question right as it was already going live, Andrew, so it is what it is.
That was outstanding.
It was just what it was, man. It takes a moment for it to, when you hit the go to start the stream,
man,
takes a little bit to get going there. But anyway, what's going on, everybody? As you can see, we're already having a good day. I'm dealing with allergies, but other than that, we're having a good day. Somebody noticed the Uncle Leo already, Andrew. And Tillman, by the way, is handling his business today. So just so you guys know, he's handling his business. So
I don't even know what that means, but sure. Yeah, I'm handling my business.
I think you don't know what it means. We were talking before. You know exactly what it means.
What are you talking about? Listen, the only thing you can control is how much business you handle. That is what that is.
Or how much you lose, right?
No, you can't control that.
Well, some people will try to send a contract at you without any kind of, and get you to take advantage, get you to take responsibility for it. I'm just saying. So anyway, yeah, y'all just missed the whole before the show conversation. So welcome to mid-conversation with us. Hopefully we're entertaining enough for y'all. But listen, it's a good day. Everybody should be kind of happy
laughing because I have no idea what you're talking about.
You can keep saying that, but it don't mean it's true. But anyway, so Bitcoin getting the move up today. Look at that weekly candle looking really pretty. Lots of stuff happening here. I know I've been talking about it the last probably week or so. I'm sure you guys have been talking about in the different shows that you've been on and whatnot about the just the general temperament of the crowd and how everybody is very bearish. The end of the world is ending, basically. Bear market bottom things, right? I mean, generally speaking, people tend to get very downtrodden. Oh my God, it's never going to stop. It's going to go way down here, usually around the time when you're at some sort of low. And so, we've had that for really about a week here. Jane Street revelations there and all that. But hey, at the end of the day, what do we have right now? We have 400,000 Bitcoin accumulated between 60 and 70,000. We have one of the longest Bitcoin miner capitulation events, been about 3 months now. That looks like it may be just about done if you're looking at the hash ribbon, according to Glassnode. And then we've got, what's the other? Oh, inflows ETFs, 265, 300 million, something like that. So quite a combination coming up that leads us to this nice kind of bump this morning after printing that nice little candle yesterday. So, I mean, even if you're holding alts, I saw somebody price that at best. I'm not feeling as bad today, or it's just something along that lines with their alts.
The truth of the matter is that we live in a very small, closed-loop system called crypto Twitter. And the only people that are unhappy right now are a very small circle on the Venn diagram. Very small. Every other circle is happy. People who invested in the S&P 500, are they happy? Yeah. People who are in the oil and gas space, are they happy? Yeah. People who are invested in any tech stock over the last 5 years, everybody's happy except one group of people. People who are leveraged traders or over allocated in crypto. So that's the only circle of folks that are ticked, because guess what? They bet the farm or they over allocated, and that's the consequence of that behavior. And you know what? I've been there, done that. I'm not telling you that I'm not that person. I have been that person, and I continue to fight those demons. Yep. When you get Kool-Aid drunk on any belief system, which Bitcoin has all sorts of, just pick one of them. XRP, have they drunk the Kool-Aid? Holy smokes. Bitcoiners, have they drunk the Kool-Aid? Everybody's drunk their own Kool-Aid. We're all high on our own supply. And when you do that, you make bad decisions. That's just the facts. But if you were modestly diversified across multiple asset classes, you're not unhappy right now. Like the State of the Union speech was, I think, very interesting to watch, but nonetheless. But I do think that for most people in America, they have seen an increase. They have seen, markets are at all-time highs. And yes, the volatility of our space, specifically the altcoins, but I mean, Scott Melker called that when Trump coin peaked. Like if that wasn't a top signal, I don't know what is. And yes, I do agree with you, Chris. We've seen a lot of bottom signals right now, but that it's always hard to take the counter trade. Like, think about it. Right now, everybody is griping and complaining and upset in the space. That's the time where smart money starts going, man, there's a lot of people puking up their positions on the cheap. Yeah, that's how I like to buy,
But it's tough, right? Like you said, it's tough. It's hard to get out of that emotional, that mental, that psychological kind of, oh my God, because what if I'm wrong? Because I'm already down because I held, from the top there and I don't have a long-term outlook, or maybe I do and I'm just holding alts, which is not the smartest thing in the world. But, it's different.
It sounds like you've already started at an over allocation. You know what I mean? Like if you're at that place, you got to back off. You got to scale out to get more cash, in my opinion. And so not financial advice, but I think, when they say cash is king and they say never be a forced seller, that's what they're talking about.
Well, yeah, but there's always, I'm glad you brought that point up, right? There's always two types of sellers, right? There's the forced seller, and there's the person who sells because they actually want to, right? And so
because they're in profit. Nobody wants to sell in a loss. So anyone who wants to sell is in profit.
Exactly. But most people come in, especially again, you brought up that being stuck in that crypto Twitter little ecosystem where it seems like everybody is miserable and everybody lost money, and it's just this small, tiny part of the overall system there. But this is the thing that I often try and talk to people about, which is stop getting so involved in your social media, because you're going to get curated. Your feed's going to be curated for what it thinks you're going to spend time on the platform doing. And for most people, it's proven time and time again that that's misery. Right?
Yeah, well, and a lot of those videos are created to help support exit liquidity events. Everybody has a motive, right? So when you are seeing a pattern of influencers that are pumping the same message, they're getting paid to do that. Point blank, like in some form or fashion, there is a mechanism whereby which compensation is being, rewarded to them for that effort, whether it's their own bag or whether it's other people's bags that they're representing. But it's not because they want you to succeed. It's just them trying to make a living, and those two motives don't always align.
Yeah. So Andrew, I know you've been keeping up a little bit with Jane Street here. For anybody that hasn't been paying attention, would you like to let them know what's going on with that?
Sure. So, first thing people need to know is Jane Street is a really, really focused trading firm on Wall Street. And the reason why that is interesting is, most trading used to happen at the big, investment banks, global banks, on their trading desks, but those trading desks basically got blown out of existence, throughout the great financial crisis in the following decade. So now additional firms that are only focused on that and don't do anything else popped up to kind of fill that void. Jane Street is probably the biggest of those, and handles enormous amounts of liquidity across all types of market participants, hedge funds, banks themselves, large institutional buyers or sellers, whatever it happens to be. Jane Street is a meaningful market participant on both sides of.
They're a market maker, don't they make the markets?
I wouldn't say that.
No?
I'd say they make all their money trading positions And as we saw in the past couple of days, manipulating and front running those positions, right? So, Jane Street puts themselves in a position, and when you find yourself dealing with that level of size, let's call it, it's only a matter of time until you get caught doing something you shouldn't do. And so the Terra Luna stuff, how that all unfolded and their role in the downfall of Terra Luna and how that affected crypto markets. That's come to light in a lawsuit. What's interesting about that is that Terra Luna has been gone for nearly 4 years at this point.
Yeah.
Their founder is in jail and has nothing to do with this. But the lawyers associated with the wind down of that whole process are suing Jane Street based on what they found, right?
Yeah.
See, they're not the traditional market maker like a bank, but according to Grok, they are the world's largest market maker in terms of quant liquidity trading, which is what I'm talking about. And when you got trades that are very deep on both sides of price, and you can weight those trades according to momentum, and you determine momentum, you're rigging this game. And whether it's short term, long term, they're using, it says that they've got over 200 electronic exchanges and other venues, making them the world's largest market maker and liquidity provider. And so when you're trying to be the quote, I think this is the biggest problem with markets, honestly. And I'm glad the story broke, because I've been saying this for a long time. And here's the case in point. Go put a trade on. Look at the current order book. Buy the order book to a certain price. You won't get to the price. Why? Because liquidity providers just like this have geographical advantages and transmission advantages, i.e. fiber across the street from the exchanges. They can see your trade coming down the pike and, like you said, front run it. And if you're doing that on the regular, and my order is being filled with injected new liquidity based upon my order being placed, like that being the trigger, there is no willing buyer or willing seller anymore. I'm not buying from some guy. I'm not playing against. It changes the game from being a poker game where the house is supposed to just rake the table a little bit, to me playing blackjack against the house. That is a massive difference.
And we need to be clear here. They're not singling out us single traders, guys. They're not looking for mine. They're not looking for Tillman's trade. But what they're looking for is these emotional
bands of liquidity,
areas
clusters.
Where you generally get in. Exactly.
And listen, let's not kid ourselves. Like every influencer that draws these trend lines and says this is the line to trade, they're no dummies. Like that. A lot of times that is the counter line to trade, because if the principal rule of markets, and I think our boy from TV, Kramer, teaches us this. You can be really good if you keep your trades quiet, like he was. But as soon as you start telling everybody your trades, they're losers. That's kind of the whole mystery of the markets, if you will.
Man, I was wondering where you're going with that. You said TV and Kramer, and I was thinking of that show about nothing.
No, Mad Money guy, how everything is counter him now. But Andrew, wasn't he a really successful hedge fund manager?
Fund manager, yeah, very, very, very successful. Again, it was 25, 30 years ago, so obviously the game is somewhat different now. But to the point about Jane Street being a quant focused liquidity provider, therein is the reality associated with traditional markets. We've said it so many times. 80% of all trades happen algorithmically. That's a better way of explaining what quant means. So these types of firms have gotten big based on, again, the vacuum associated with trade desks being shut down across what used to be the value associated with trade desks, which is, Morgan Stanley used to have a massive trading desk across both equities and fixed income. And by the way, when those started to go away, fixed income stayed for a while because the ire of regulators was focused on equity trade desks versus fixed income, but fixed income eventually went away too. The point, though, here is that Jane Street was playing games with IBIT. They were playing games with BlackRock's ETF product, and the options and the CME gap and all sort of futures and all sorts of stuff with that. So we would see, you can go look at this for the last 6 months. You would see a movement overnight or in the morning to the upside, and then right around 9:30, 10, whatever move to the upside happened would actually just get smashed to the downside every single time. Zero Hedge stayed on top of this really, really, really well. He would basically call it, or whoever is at Zero Hedge running the news there, they'd call it every day. For the last 3 months, they're like, waiting for Jane Street basically to smash the bid on Bitcoin. And it literally happened every time until the story broke about what went on with Terra Luna. And obviously Jane Street has to fade whatever those practices are to the background. And then look what happened yesterday. There was no smash to the downside at 10 a.m. It just kept going up. Same thing in the evening. We went higher, went a little bit lower. What happened today? Back up, and then even further back up. There was no smash to the downside for Bitcoin. So what I think over time happens is no different than, I don't know how many people watching this show have watched the show Billions, right? So I don't know what season it was, but Chuck, the Attorney General or the USA, whatever, for the Southern District of New York, was trying to get a firm like Jane Street that was a huge market maker across all sorts of different assets. And he, would send basically fake information that they're looking at their, T-bill type of work that they're doing. And so they stopped it for a while when the executive / the firm knew that the Southern District of New York was looking at them. So they stopped it. Then he fed them additional information saying, hey, we're all good. We're not looking at anything anymore. And then almost immediately that game was back up, right? So think about this type of situation. They may go away for a while associated with their ability to do some of this stuff, but it doesn't mean it'll never happen again. It's probably,
well, what it points to is a systemic problem, which is, does depth of liquidity and order book, at what rate does it outstrip the capacity of a market maker with the right algos to move price? Like, really, what is, let's just say, how much liquidity is needed for them to pull this type of maneuvers off? That's the question I have. Because if it's very, very little, it means the algos have that much of a delta advantage, which means being a market maker we have to have a lot more scrutiny, or we have to put all of this on chain so that we can see it all and run AI to determine who the bad actors are, because the AI will determine that. Like, if you run all of the blockchain, if you tokenized all the securities and everything was public ledger, you could have an AI bot monitoring liquidity providers for these types of behaviors, and they would spot them instantly, and we would know who the culprit is. And then you'd have a true free market, which is, again, now undefinable as far as I'm concerned. And it's something that's been bugging me for over a decade. But, you see these things happening, and look at the silver market and what has happened over the last 2 decades. Like, we know that there's been massive manipulation in that. So, from a broader perspective, I think this is an extension of the Bitcoin standard permeating every financial nook and cranny that exists. You know what I mean? Because it truly has to be transparent from a market liquidity provider perspective, or there's inside baseball with algos that then it's like with very little leverage, they can make a huge impact in market price or market conditions.
And
because
oh no, I was just gonna say, and human beings are opportunistic. So I mean, if you're not able to check them, as you're saying here, of course they're going to take advantage of it.
This type of power is like the power of the Federal Reserve. This type of power is like what Lord of the Rings Tolkien was trying to imitate. When you put on the ring, it corrupts everyone. No one can have this type of power unchecked, right?
Yeah.
Because unless we want to make, like, why do you not go gamble at your friend's house and let him run casino slots for you versus going to Vegas? Well, besides it being illegal, you wouldn't trust your friend not to cheat you. If there was unregulated casinos out there, you wouldn't go, because you'd know that there was funny business. There's this perception of, the odds, and you're accepting losing odds for the chance of you being an outlier when you go to Vegas. Well, if that perception, if that trust was broken, you'd stop going to Vegas too. And all of that would money. And so the markets have to be trusted. And with algos and market liquidity providers like Citadel, Jane Street, all these big boys, it's like, who's the fox and who's the hen house here?
Yeah, right. So Citadel's another one, right? And what do we know about Citadel from 4 or 5 years ago on the whole Robinhood thing? Like, effectively, they were behind all the shenanigans that existed there. And oh, by the way, nothing happened to them, right? Like, everybody was all up in arms, and 2 years later, the investigation was effectively shut down without even a whimper or even a meaningful fine. So, there's a reason why these liquidity providers exist, is because, again, a vacuum existed, and they kind of have to exist. But at the same time, power corrupts, just ultimately it always does. A couple data points too. So in Q4, the second largest acquirer of IBIT was Jane Street, right?
Sugar.
Yes. So there you go. Right. So it was, on purpose associated with, acting out this particular type of trade activity to enrich themselves. Also, since the Jane Street quote unquote bust or story came out 2 days ago, Bitcoin is up more than 7%.
Yeah.
So that happens, shut down the activity, Bitcoin moves up 7%. So, it's
it reminds me though of, like, you go to a house and you're looking to buy it, and you see roach.
Yep.
If there's one.
Yeah. There's a lot more.
Let me hit you.
This just reeks, man. It's so sad. It just
Well, it's the reason why when the whole thing happened, with GameStop and Robinhood, a let's just call it a meaningful potential emerging investor class that was young people are like, this sucks. I don't want to be part of this. I don't want any part of this, because the game is completely rigged. Like, they turned off whatever it was, the buy button. They turned off the buy button.
Yeah.
This, I don't want to be part of this ever again. Not interested. And what did that give way to? That gave way to, for a while, the meme coin movement. That gave way to more people being involved in crypto, because they saw it as potentially not as manipulated and outside of traditional financial rails. point being, though, is whenever capital of scale finds its way somewhere, this kind of stuff is going to be going on. It just is,
Well, and as a matter of fact, what I'm thinking about here, wasn't SBF and Ellison and a few others there, weren't they all from Jane Street?
Teeth at Jane Street. That's right.
Yeah,
they cut their teeth at Jane Street. And when they left Jane Street, they started FTX.
Yeah.
So they learned what they learned there and then employed those types of activities.
And I was going to say that's funny because they say, when you go to prison doesn't actually rehabilitate you. Criminals learn to be better criminals in prison, right? It's just you're in an area, and I'm not saying that people go to change you learn to be criminals, but when you go to an area where a system produces a certain result, and you're a part of that, you're going to learn how to do that. And then you're going to leave and you're going to, probably try and continue that yourself. And
there's people, it reminds me of high school, right? There's the kids who spend more time cheating than they would have studying. And then there's kids who spend the time studying. And, when you run a business, you have a chance to cheat at every turn. You look at all the fraud that's rampant in Minnesota right now. Look at, car dealerships. Look at how like one car dealership can be completely above board, run successfully for many years, and have exits like John Elway in Denver, 3 dealerships for like $90 million back 25 years ago, maybe 30 years ago. Like, you can do it exceptionally well. I know Saban owns a bunch of Mercedes dealerships, and like that is a legitimate business, right? Yeah. But then you can go to the other side of the spectrum of that same business, and they're fudging on credit reports to get people approved that shouldn't be. They're lying on bank records. They're forging documents. They're doing all sorts of shady stuff to earn the commissions attached to the sales. And you can go a decade of doing that without getting caught. And then boom, all your sins find you out in one fell swoop. And, it just reminds me again of like, this is not one cockroach we're dealing with. This is a systemic issue across, this is accountability. And that's why blockchain is so important. This is, again, harkens to the Bitcoin standard. It's like, if it's worth doing, put it out for public scrutiny and let people see what you're doing. Like, things done in darkness are typically things that are trying to be hidden,
That's what they're done in darkness, right? Yeah. Hey, so what do you guys think about BitDeer, man? So BitDeer, Bitcoin miner, finally just sells all its Bitcoin treasury, goes and gets some loans, decides it's going to pivot over there fully into hyperscale centers and whatnot. This is something I was talking about probably about 3 or 4 years ago, where we were going to see these Bitcoin miners at least bring in, but because the facilities are a lot more, they have to be a lot cleaner, a lot different than what you could do with Bitcoin. We were going to see probably a lot of them pivot toward this, and I think we're seeing that now with BitDeer, of course, being just the big news headline this last week. With that, what do you guys see with that? Because recently we got the Bitcoin, the Bitcoin hash price really low, where we had the difficulty really high. That big divergence is really, really squeezing out even more than just the margins, margin miners, right?
This is Tillman's. This is right up his alley.
But it's a continuation of the exact same thing that's happened. Like, I used to be a miner. I'm not anymore. Why? Because I got squeezed out. These are small fish that are just going to get. And I think the game theory that you are familiar with, Chris, that you have actually included in your book, maybe, or talked about before, the end of this rainbow is nationalization of a proof of work network that isn't just used for the securitization of financial transmissions, but also data and all sorts of other things that are of high priority. Why? Well, because energy ultimately is the cost. And when you're commoditized, when you're valuing which side is what is more valuable to a nation, this technology and its function or electricity, It's a very easy answer. And so that leads every nation ultimately to nationalize a portion of their energy production against this. And one thing that's interesting about this type of a network, you know, Elon's proved this and talked about it, and I don't need to try to do something that he did better by convincing you. But if you really just think about the notion of like, where is the most energy produced every day? It is the sun.
Yeah.
And it can produce way more than we need for the very long foreseeable future. The problem is that it's not, electricity isn't stored or transmitted very effectively, and the square footage you need for solar panels competes with development square footage. Therefore, you have to build the solar panels way far away, and you lose electricity in the transmission, thus making it not as efficient as a nuclear plant that you can build right next to the city area. So all these things are competing interests. But if you talk about data centers, you can build them out in the middle of the desert and put the entire roof stacked with the most recent solar panels and power the entire thing on its own merits in a very green and, you know, sustainable way. That's going to happen. The infrastructure cost of that will be looked at, in my opinion, like the road, the interstate highway system that we put in, you know, FDR days. So like it'll be a national security thing. It'll be nationalized. It will provide a ton of job creation, and we'll find some stretch of desert out in Nevada where it's, you know, 17 square miles of data center. That's where I think we end up.
That's what you think we end up. But I mean, you know, speaking of energy in solar power, you know, Elon's talking about, you know, having these solar farms in the sky, basically, you know, up there in the atmosphere, in space, and as well as keeping data centers up there, which is really interesting because if you've got data centers in space, you know, all of a sudden you're outside jurisdictional, you know, overreach, right? So, you know, a country can
not
say,
against
"Oh,
Trump,
well,
buddy. That's his 60 chest. That's why he created Space Force. He is the new IP issuer of space."
Before we get into space energy, whatever,
Andrew's so done with it already."
Go through the Zeta hash thing again. I think that's an important point you've made a couple times on some other conversations we've had associated with Bitcoin. I think people should hear it, if for the first time or not, or again. It's
coming from you. I'll take that as a compliment, and yes, I will talk about it. So, like, if you think about a network as a end points, transmission points that can send and receive information, it's like a distribution system, if you will, like a warehouse that can hold information, and then all the docks or trucks that can send and receive goods and information. Our brain is similar to that. The smarter you are, the more connections you have. All nature reeks of this infrastructure design. Everything does. Aspen forests, they're all connected underneath the root system. You poison one, it poisons the whole. They're all networks. Networks are valuable. They're arguably the most valuable. Networks of human beings are valuable. Why do people join fraternities at colleges? To network. Why do you go to bars? To network. Why do you go to conferences? To network. Connection points matter. Well, Bitcoin has created the largest network that man has ever created. Now, that doesn't happen by accident. It happens through perfection of design. It happens through natural law. It happens like when you put something black in the sun, it gets hot. Natural law. So if a network is populating, it's because it's growing according to natural law, survival. is one of those natural laws. Well, there's a need, there's a value in that growth. And Bitcoin has done it exceptionally well for 17 years. And we have crossed a milestone very recently that no one's talking about, but we have to invent a new word for it, which is Zeta hash. We now have a network that has the capability of transmitting 1 Zeta hash per second of data.
By the way, when you talk about this, it immediately makes me think of what kind of quantum computer, by the way, is going to find a way to figure out zeta hashes and somehow break those.
It's more hashing than the Earth. You couldn't reverse time. There's not enough energy in the universe to create enough to go back to Genesis block. That's what I'm saying. Mathematically, it's the most secure network that's ever been created. And the amount of computational energy that is present on that network right now is the closest thing to alien tech that we've ever come.
The A word.
You know what I'm talking about. Like it's giga quantities of processing power. It would be like us going like, let's boil it down to something simple that people understand. Like, go look and research what the odds are of you winning the Powerball. Yeah. Now imagine a machine that could guess that now, and be ahead of every computation, no matter how difficult you pose to it. It could figure it out instantly. Well, now imagine that network being built on the back of natural law and human, like totally segregated human will. Like, it's not a company that's doing it for world domination purposes. It's a bunch of nerds like us that are wanting to be a part of something that is bigger than themselves. And we've done this. That is unreal to me. That is something that it's the only time in human history. It would be like the equivalent of all of us just kind of one day going like, I write a white paper and it's like, we can build the pyramids, but 100 times bigger. And please come join me in this effort. And then enough people show up and we actually pull the thing off. We got 3 pyramids that are 100 times bigger than the ones in, Giza. Like, that would be something. We've done that. And everybody's like, this thing is magic internet money. Oh, no, it's not. It's like the largest network that's ever been created by humans.
Jojo Crawdaddy says, I just got a letter in the mail informing me that my data has been breached once again. Can't wait for the hackers to have even better tools to steal from us. Nothing will be safe.
That goes to kind of the end game or the end theory on why proof of work would be a better solution for our individual and public data to be stored on.
Yeah. It's a harsh thing, where we're required more and more to be digital by companies, by government and whatnot. And yet they can't, obviously figure out how to keep it safe. Right. I mean,
every code can be hacked, but energy creation can't.
Exactly.
So if you tie computer code to a natural scarcity in the universe, you have a governance mechanism that can't be broken. The only thing it can be is nationalized, which is why that end game is inevitable. It's where the biggest group of people with the most energy production potential get back to back and agree on the terms by which they all operate. And then that greater good is the rule system by which the proof of work network is established. And that is exactly what Satoshi did, but he did it for, something this narrow and this deep, which is peer-to-peer transfer of value.
So what do you think then, the big bottleneck? I mean, we used to be really blunt about it and say energy, but really now it's the energy connection issue, right? And so you've got a lot of new data centers. You've got Meta, you've got Microsoft, you got Google, you got all these guys that are signing these off-grid contracts now with like methane gas release or, flared gas, and they're directly bypassing the grids. So if you're thinking nationalization,
everybody just calls those net neutral in the mining space. It's like net neutral. If you can get net neutral through a hydro, because there's only this much demand from the hours of 9 p.m. to 5 a.m. and you're filling the excess demand that's, the water's still flowing over the dam. The power's getting generated. If you don't use it, it's being bled off into the atmosphere. It's being lost. So that's there's lots of ways to harvest that. And that's why, at the very beginning of Bitcoin mining and, the early stages of ASIC, this argument about energy inefficiencies and how taxing this was on the grid was a valid argument. Well, natural law pushed us to free energy because that's where you make the most money. It's just a brilliant design. Brilliant.
So where do you think then that falls within, again, going back to this idea that the government potentially nationalizing a lot of the energy, in that way? I mean, if we've got more and more of these coming up, because I'm watching this, every week, and it's crazy to me just how quickly this has really exploded. Because, again, I take this really kind of personally as I watch it, because I'm here at, in Texas. And as you know, ERCOT, we got our own grid here. The load is huge, especially with all the data centers and everything they've been moving in here. We've been very accommodating. But even now, ERCOT's like, oh crap, and then they've had a lot of these rule changes here more recently over last year, where they're looking at battery backup, they're looking at, all this kind of stuff. So how do you think
this
that
is
kind of
ultimately where winners and losers are chosen at the government level, right? It's like they're gonna grant permits to people that they want to grant permits to, and God only knows whether that'll be a corrupt or a legitimate, approval process. But at the end of the day, the government controls the natural resources of the land that they govern, like that is, and they will choose eminent domain for the greater good whenever they have a case for it. And this would be one of the largest cases for it. And what do I mean by that? Well, just expect a ton of PPPs to pop up here in the next few years, public-private partnerships, like where it's like building a stadium, right? People get rich off of tax-backed stadium construction, but people are willing to be taxed for the new stadium. If you get cheaper energy rates and you get better, all of the things that consumers want as it pertains to more predictable power, then, there will be things that they're willing to give up in order to do that. And I think public-private partnerships and a public tax on some of these builds that will help contribute to the economic value of that proposition will be applied. In my town, it's mining. No, a huge group of people don't want to see mountains strip mined because it's ugly. But there's a lot of money in that mountain that a lot of people want to get to. And what happens? The government subsidizes another economic effort on the mountain, like an amusement park, for God's sake. Literally, we have an amusement park on the top of a mountain here. And it was for that reason. It was like, let's figure out a way that helps all the people of the town, and we'll do some tax incentive or some incentive through the government's efforts to repurpose this. And we'll see the very same thing happen with our grid, power production, and companies that are helping that public-private partnership pull it off.
So Andrew, we're kind of talking a lot about here about, mining, about energy, AI, stuff like that. So obviously tonight, NVIDIA, after market hours here, just in a few hours, is going to release earnings. There's been a big scare about Apex, not Apex, but AI Capex. There we go. I was trying to say, and it's not realistic, what's going on and whatnot. And so I think a lot of people are looking at, even if, NVIDIA beats on earnings and they have some sort of positive forward-looking guidance, I'm seeing a lot of scenarios where people are still trying to find something negative in that. What do you think?
I mean, NVIDIA over the last 3 quarters, when they've announced, the stock hasn't gone nuts the way that it did the previous 3 to 6 quarters, right? So the expectations, the revenue expectations have gotten so out of hand that it's almost functionally impossible for them to quote unquote blow out earnings. Like at some point, CapEx does have a cap, right? I mean, at some point you can't sell more stuff to people that already have all the stuff and have spent lots of money. How much more money can they spend on the stuff? At some point it starts to slow down just a little bit. Now, again, that rate of growth is still incredible, but we're talking about a stock price associated with the narratives on Wall Street, the expectations on Wall Street that exist to push things higher and be, the most outlandish, prediction, for what NVIDIA's earnings will look like, or their forward statements are going to look like. And then there's a consensus that somehow, and especially with NVIDIA, that builds around that top number, the highest number. So it's the maturation of, a $4 to $5 trillion company. At some point, the rate of growth is going to begin to slow. It's still an enormous, incredible story and all the things. But at the same time, you just, at some point, a cycle catches up to you. So I wouldn't expect it to be some sort of blowout number and the stock to just go crazy. That hasn't happened the last 3 times they've announced earnings. And even moments where they've announced meaningful forward guidance, it still, for some reason, just wasn't enough. Anytime we have conversations about the hot company, the hot stock, whatever it is, I'm just reminded of a decade or 2 or almost 3 before, and there was something like it inside of a 5-year period, right? I remember Qualcomm. Qualcomm was effectively NVIDIA 20 years ago.
Yeah.
Where every time, they you couldn't not talk about Qualcomm on CNBC, because for a 6 to 9 month period, it's what everybody wanted to talk about. And, they even had a little meme, before memes, they had a meme on CNBC that anytime they talked about Qualcomm, somebody would push a button and there'd be a voice saying, Qualcomm, 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 right? CNBC had turned into the Qualcomm channel.
Intel was the same thing.
Before that, Intel was the same thing, right?
Yeah.
And so now we're at a part where NVIDIA is that stock. Which, by the way, about 3 or so years ago, Tesla was that stock, right?
Yeah.
So Tesla was the thing. It's cycles are cycles, and it happens, and you can have everybody literally on that planet, wanting to buy your stuff, but once you fill all those orders, like there's nobody left on the planet that needs
just going to buy it, right?
The next quarter or 2, you're kind of stuck. And again, that doesn't mean that you're not going to still have a one of the greatest quarters in top 10 quarter in the history of the company. It just means that top 10 contextually may not be exactly what the street was looking for. And so there you go.
Right. Haven't they beat for the last 17 or 18 quarters or something?
Yeah, of course.
Yeah.
And that's the reason why they've gone from 1 trillion to 4+ trillion. I don't know what it's sitting at today.
It's ridiculous.
But by the way, Tillman, did you look at that tweet that I sent you? Did you look at that post that I sent you via text?
I don't know. No, if I did, I can't. Oh, yeah, about the silver futures.
Yeah. So, I mean, I hadn't looked at silver for maybe a week and a half. It's back above 90. And again, well,
it's a really interesting. Let's talk about it, because I'm obviously, got a dog in the hunt. You can see all the same rules apply that have applied to all the other pumps.
Yeah.
in the fact that, at the end of the day, the paper has always won.
Sure.
You know what I mean? Like the paper's the dog, the metal's the tail. And through all sorts of ways, they can get price to cool off in the event that it goes crazy, like GameStop, like when the Hunt brothers cornered it, like those types of events. Well, I see that battle now. There's one thing that's different, though, is that China's stopped exports. So the global arbitrage loop is broken. It's like in the past, if a price in a certain country got disjointed, all the people would start buying and supplying and rebalancing it to where there was a global, agreement on price. There was one silver price in the past, is the point. Now there's two. There's the China market for physical silver, and then there's the everybody else that listens to the paper market from the COMEX and the US. And they don't agree. It's the first time that's ever happened. And so your guess is as good as mine as to I think I always caution myself when I'm in a position and I'm betting for the once in a lifetime anomaly event. That tells me I need to be at least half out of my position when I'm feeling like that. I like to have the debt, I like to be way in profit. Why? Well, because I'm selling myself Kool-Aid. I'm selling myself on the 1% likelihood that there's this massive squeeze globally of silver, and that Tesla comes out tomorrow and says, we're putting solid state batteries in next year's cars, and we just secured futures silver and all the reserves of the 5 largest producers of silver. Like, could that happen? Yeah. Is it likely? No. What's more likely? That silver goes like this for a while, and that you get real bored with it going like this for a while, and you end up selling when you're one day going, I'm sick of feeling like it's kicking me in the groin every month. That's what I think is probably more likely to go on. And I think it's likely because you can hear both sides of the street yelling at each other. One side's going, massive physical shortage, 26,000 contracts scheduled for delivery at the end of this month. COMEX can't meet it, blah, 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 blah. And on the other side of the coin, it's like, hey, just print some more paper.
Yeah. Just like that, huh? Listen, real quick here. Phil's got a good question here. If NVIDIA misses or guides softly, so let's say they beat earnings and whatever, but then their future guidance is not what people are really kind of expecting, getting to the craziness Andrew was talking about. Is this where risk off happens and tech stops collapse and Bitcoin breaks away and does not follow tech stock correlation? What do you think?
That's just like, it's a great question, but it's very difficult to answer because it's like 5, if this, then what about that? And then also if this, and then if this, and if this, and if this. So it's basically like 5 versions of, will Bitcoin go higher if something isn't great with NVIDIA? And then there's a cascade of events associated with tech stocks and risk off, and then correlations, and then Bitcoin goes higher. And so I don't know. And it seems like that would be somewhat, short term versus mid or long term. I generally look at long term. I can't believe it's taken me 50 minutes to talk about BlackRock on this show. But, I just look at the fact that there's just no slowing down at the highest levels of capital associated with Bitcoin, and then also some crypto narratives, DeFi and the like. I'm also looking at, so BlackRock is all the way up here, top of the mountain. But I also like to look at the middle of the mountain, because that's where a lot of, mid-level institutional, not only flows, but conviction, it's kind of holding up a lot of stuff and building a base. Just go look at what Bitwise has done just in the last 6 months.
No.
Announcement after announcement after announcement after announcement. When we started this show a year ago, Bitwise had 12 billion in assets under management. I don't know about you, but I'm fairly certain that Bitcoin and then the others that they cover in ETFs are effectively down in price since that time. But they're at 15 billion in AUM now, right? Yeah. So what does that mean? That just means that outside of crypto Twitter, people are making allocations to the asset class. And so not sure about NVIDIA and, short term and Bitcoin and the relation there, but I am certain about between BlackRock and Bitwise and the type of people and entities that they serve. Those entities are continue to move capital into the space.
Yeah, and I've actually, I've been talking a while now about the idea that the biggest misprice across the markets is the way that Bitcoin is being treated by your hedge funds and whatnot, which are basically treating it like a tech stock, right? Mm-hmm. And for me, again, I see that, and especially with what you're talking about now, which is, hey, these real institutions, these ones that are likely to hold it for, quite a while, are really ramping up. And so if we get outside of crypto Twitter, where everybody's worried about retail, and you start looking, okay, well, sure, retail holds more Bitcoin than the institutions, right? But that's collapsing, right? That's starting to come down. We're seeing retail continuing to sell. They're all worried it's the top, it's the end. Oh my God. And those big institutions are there soaking that up. And so, and the thing about the big institutions is they control more at a single point. So you have to get coordination among retail traders, tons, hey, Jim, hey, Bob, hey, Jerry. Everybody got to call everybody up and do something at the same time versus one or two institutions doing something, right? And so even though retail holds more Bitcoin, the institutions, as Andrew's pointed out so many times over the last couple of years here, the institutions are controlling that floor more or less, right? And so the institutions continue to give us those higher floors, even when retail, crypto Twitter is freaking out about what's going on and selling and selling. And I think everybody's missing that. And so when you look at the hedge funds coming in and they're treating it like a tech stock, I think that's going to play out really, really terribly for anybody that's bearish on Bitcoin, when you're looking out a year, 3 years, 5 years down the road. We can't hear you, Tillman. Can't hear you, bud.
Yeah, he may have lost its audio.
Yeah, when his screen went black there.
Yeah. When does the cap sitting on the sidelines start moving? I mean, the question about capital sitting on the sidelines start moving, it has been moving. It's just not been moving in the direction that question presupposes, right? So that question would like capital be moving into, equities, Bitcoin, something, right? That they want to see go higher. And capital is always moving. Capital is always flowing. It just may not be in the direction you personally want it to flow, right?
Yeah, exactly.
Yeah, I just was going to say that. Yeah, the it's all relative to how much money you have to invest and how much you expect to make. And Saylor said something on, I think, one of his speeches in the last couple of days at his conference, and it's really true. He said the place where Bitcoin has its final blow off top, right, where it's done with its entire cycle of price discovery and it kind of consolidates, is when the wealthiest of the wealthiest funds, royal families, the biggest amounts of wealth essentially make a 2x on their money. That's all. Like when you're dealing in pennies, you want the 100x. Mm-hmm. When you're dealing in nickels, you want the 10x. When you're dealing in dollars, you just want the 2x. Yeah. And that is the evolution of the crypto space in a nutshell. And the people that are buying now are placing billions of dollars and they're happy with a 3x. In fact, they're going, could Saylor possibly be right on a 10 to 13x? Like,
Yeah.
are we going to 1 million? And that is the asymmetric upside, because it's incredibly hard to make 8% on $1 billion. It's not hard to make 8% on $100. You know what I
Yeah.
mean? And that is the dynamic that I think is lost on most people as it pertains to like why institutions have a very different outlook than retail does.
Yeah.
And the capital placement and buying Bitcoin now.
Yeah. I know we're going to get ready to go here, but had a follow-up question. It says, fair enough, but is there not a record amount sitting in the money markets at the moment, or has that changed recently? No, there is 7.77, there, but just because it's sitting there, I know that's something I've seen on crypto Twitter. I'm sure you guys have seen as well. Everybody assumes that's all money that's just going to be bullish and go in to buy, but that isn't how money markets work exactly, right? It isn't all just sitting there ready to pop out, right, Andrew?
Well, I mean, there's a portion of those money market funds that are in good money markets that are paying 3.5%, 4%. So there's a portion of it that just won't move out, right? It'll just stay there for a long time, because from an asset allocation standpoint, you do have to have cash position of some sort for that. But at the same time, it's probably more a dissertation on the total amount of money that's been created in the past 5 years than anything else, right? Because broader markets are near all-time highs. I mean, I think we're close to under 1% away from another new record for the S&P 500. We're right around 3 or 4% for the NASDAQ at another new all-time high. So where is that money going to go? I mean, are you going to tear off a third of 7.7 trillion and hammer the all-time high on the indices? No. But the capital still exists and has been created again in the past 5 years. So what do you do with it? Well, it turned, if it can find a home at 3 to 4%, kind of to Tillman's point, it's not the worst thing in the world. Now, where does it go when interest rates go below 2%, as they probably will in the next couple of years? Well, then we'll see. Then we'll see if that money decides to find a different home of some sort.
Well, it's looking for a home all the time, and the value proposition will determine whether it gets off the sideline or not. If silver crashed to $15 tomorrow, you'd see a lot of that money come into play. If Bitcoin crashed to 30,000 tomorrow, I think you'd see a lot of money. But everybody's determining what the next dog to bet on is, right? And that's just risk capital is very emotional most of the times, and it looks for when there's blood.
Yeah. Well, hey, man, listen, I appreciate you guys as always. Hopefully everybody got a little something from there. If not, well, that's on you. Anyway, hey, listen, we'll be back again next week as always. Hopefully y'all are doing all right out there. Just, I don't know. I think probably the best, like, real advice that the three of us can give you is stop listening so intently to crypto Twitter. Most of that, there's either a reason, a narrative behind what they're saying, or they really don't know what they're saying. And, if you're new to markets and new to these things, you're not going to understand how to distill that information. So just be careful out there. Risk management is where it's at.
Here it comes.
Hey, no. I just said risk management is where it's at, right?
I feel it.
And you agree with me on that, right? Risk management is of the utmost importance when you're in the markets, right?
I would say that it's 1/2 of the ratio. So the risk reward ratio is very, very important.
Reward is absolutely where it's at. Your risk adjusted return is the most important thing. So
I would agree with that.
All right. Hey, listen, y'all have a great weekend, great week and weekend coming up here. We'll come back to you next month. So it'll be March, and we'll see if we get follow through on this little candle today. But other than that, y'all follow these guys. Follow Andrew out there, AP_abacus. Follow Tillman there. He wants followers. He wants tons and tons of followers. Right, Tillman?
I want good followers. I want normal people. I don't want bots in there every time I say something promoting their next meme coin, which is basically all of crypto Twitter right now.
Pretty much, right? Anyway, so hopefully Elon will get that figured out a bit more. I know they said, real quick here, as we're going out, I just saw something where they were changing the API so that you actually had to be a human to reply now, or coming up it's going to be. So these bot farms that are out there running through the API and just replying through the API apparently won't be able to do that anymore. We'll see if that helps anymore, makes it a better experience.
What's going on with your forking book? What's the deal with that? What happened with that book? Give me the latest. Is there any updates? Is there any editorial changes? There's
about to be, actually. I'm about to update it a bit and release it out there. So that's exciting. It's funny that you asked about it.
Orange and black today because you're thinking about.
Well, the orange and black today because hey, it was a Bitcoin day. People have been struggling, been crying a lot about Bitcoin. It's a good day. It's the best day.
The worst Bitcoin orange I've ever seen in my life. That is not Bitcoin.
What? What was that?
You muted me when I was laughing earlier.
I have no clue what they're saying here, guys. Sorry about that. So I guess we'll get out of here.
No.
Now his mouth is moving. All right. Hey, listen, we appreciate y'all joining in. Catch us next week. Same time, same channel. We'll leave the bats out of it. Thanks a lot, guys. As always, we'll catch y'all next week. Take care, everybody.
See you guys.